when I get asked what I do for a living, we can very rarely leave it at that. As soon as you say that you have anything to do with the stock market, if I ever admit to being a day trader, there's always a ton of follow-up, like, oh, well, that's either so good or so bad right now, or that, oh, my neighbor turned me on to LMNOP. Have you seen that? What do you think of that one? With some obscure ticker that I've never heard of. So let me try to explain to you what it is that I do. And I'm primarily what most people would consider an index trader. And what that means is we have indexes like the S&P 500 and the NASDAQ and the Dow and the Russell. And I really focus on those. So whenever anyone's asking me about a particular ticker or how do I find what I'm going to trade to day trade that day, that's not a problem in my life at all because I trade the same thing every day. I trade the S&P 500 with a little side of NASDAQ. Now, that's a little bit complicated because technically you can't trade an index. So what I actually trade are index derivatives. So there's two main derivatives that I trade. There are some other kind of products, but almost all of my trading is either going to be in options or futures, which you might have heard of before. I hadn't really messed with them at all until COVID, like a lot of people. And now I literally dream about these charts. So what I do with the options is I can trade, and I'm just speculating on these, but the option gives you the right to buy or sell the underlying asset for a certain strike price. And that sounds really kind of complicated, but what we're doing is we're speculating in these like you could speculate in Apple stock or anything else. We're expecting these options to go up or down in value. If we want them to go up, we buy them. If we want them to go down, we sell them. There's also other ways that we can use options without selling and without being short, which really helps if you have a smaller account and you're a home retail day trader. And that's with puts. So you can do calls if you want the market to go higher. You can do puts if you want the market to go lower in price. And what that is you can make a speculative bet that the calls or the puts are going to increase in value. Why would they increase in value? Because if we're getting a call, so we're going to get a 720 call for the spiders, which is one of the main derivatives of the S&P 500, we can say that we think that the spiders is going to be increasing in value. It should probably be at least 720 by whatever date we select. So there's a couple components to options. There's if price is going to go up or down, we're going to buy or sell a call or a put. But we also have to pick a date because these contracts expire. So we're speculating on a contract that's value is based on the future value of something like the S&P 500. So that's what I have here. And we can pull up an option chain for any of these dates and we'll have all of these values. There's a bid and an ask. This is just like an eBay auction. This is the same thing they have on stocks and other assets. When you want to buy, there's going to be the seller is asking for this price up here. The buyer is bidding this price down here. And when those overlap, you get a sale. And so that's what we have going on in some of these columns. I have some extra columns going on here that I've added over the years for some extra analysis. But at its core, when I'm trading options, I'm speculating on the idea that the price is going to go up or down within a certain period of time in a way that I can capitalize on the value of these options contracts. And I use these most of the time when I'm looking at price changing over the course of weeks or even months. I have some options dating 18 months out, even 2 years out sometimes, although a lot of the time I'm looking at 1, 2, or 3 months out for these type of trades. We can use them intraday as well. They can be really fun. The cool thing about options is they're leveraged because one contract controls 100 shares of the underlying asset, whether it's Apple stock or the S&P 500 ETF SPY. That means it's leveraged, and it's leveraged in a lot of ways, and that's what a lot of these different numbers over here are telling me. But basically, if the value of this contract is going to go up, I want to be a part of that. And so that's what I'm doing here. The other way that I day trade is with futures. And this is another derivative of these indexes. So right now I have the ES futures pulled up, and this is a derivative again of the S&P 500. I don't have to look at what I'm going to trade every day. I can just be an expert in this one chart. I know how it moves. I know day to day, just in my head without even looking, where these major levels of support and resistance where I want to get in and out of the market are. And it just keeps things really simple. So I'm already looking at the value of the options. The numbers will be a little bit different. The spiders is an ETF. It's a 3-digit number that's similar to this 4-digit number, but they're all based off the S&P 500. So this is based on the future value. Instead of these contracts, when I showed you the options, there was a contract for basically every single day. The futures market runs on quarterly contracts, so these expire every quarter. And what we're tracking here is what we expect the value of the S&P 500 index to be at the end of that quarter. And we trade these up until a few days before they expire. And the value will get closer. We'll start with a spread between the index and the futures. And the closer we get to that expiration date, the smaller that spread gets, which is the difference in the price. But again, I'm not looking to take possession of this contract. I'm literally just speculating on it. So I use this for intraday moves because it moves so fast and so highly leveraged. And depending on which brokerage I use, I can control one of these contracts with about $500. The crazy thing is the notional value, when you actually calculate all that out, is well over $250,000, which they're letting me control with this itty bitty teeny tiny amount. So I can get a lot of leverage on this asset here. And you can see these numbers moving up and down. It always moves in a quarter, and those are ticks. And each quarter tick is worth $12.50. So each time this moves up here and then back down, that's representing $12.50. So there's 4 ticks in a point, and each point, because it's worth $12.50 per tick times 4, each point is worth $50. So you can see how a little tiny move in the S&P 500, a little 0.5% move, can be extremely profitable. And these can end up being really scary to trade sometimes. So we also have micro products that are worth 1/10 of the value. And a lot of home retail traders trade that. And it's not just on the S&P 500. That's just my personal favorite. We also have the NASDAQ, the Russell, and the Dow. And in the futures market, it's all pretty similar. So we have these quarter ticks here. The thing is, 1 point in the S&P 500 is worth $50. And 1 point in the NASDAQ is worth $20. But tick for tick, the NASDAQ will move 4 or 5 times as much as the S&P 500 does for the same kind of move. And they track a lot of the same stocks in these indexes between the NASDAQ and the S&P 500. So these two do tend to move pretty similarly together. And because of that, I can base strategies based on how well they're moving together or diverging and not moving together. And so I've showed you the S&P 500 and the NASDAQ on futures. We can do the same thing on options. I'll kind of bring this back around to center. So the SPY is one of the main and most popular ETFs for the S&P 500. But we have ETFs for the NASDAQ as well. The most popular one that would kind of equate to the spiders or the SPY is the Qs, the QQQ. And this value, it doesn't really look like the futures value so much, or the index will be a lot closer to that futures value. But this is an ETF that tracks the NASDAQ. And so this is a way that you can trade the NASDAQ with options. You can trade options on the futures contracts, but the way those values are tracked is a lot complicated. And for most people, it's not really something you need to worry about. But this should help explain what it is that I do. There's a lot of people, both on YouTube and elsewhere on the internet, that are selling all these pipe dreams and making things really complicated. And that's why I'm here, because You don't have to buy all these expensive courses. I learned all of this for free on YouTube, believe it or not, all the options and futures information that I have. And so I'm feeding it back in a free, no-nonsense way whenever I possibly can. So if you want to subscribe, that's exactly the kind of thing that you'll get here. And then I also started a trading community because as a home retail trader, you get very isolated and you don't have a lot of people to talk shop with because you probably are still a little bit confused after I explain that. So I created the Trading Ranch so that we could have a community to talk about all of this stuff, to talk nerdy finance stuff, and I have that going as well. So if you'd like to learn more about that or join me in any of this, bullbarbie.com or the description below will be a great resource for you. And if I can do this, you can do this too if you really want to. So I'll help you out if you want. All right, love you. Bye.